G'day everyone, welcome back to Pete's Investing. Today is May 27, 2023. This is the iron ore price update. We've got a weekly and daily and hourly chart here, and the weekly and the daily indicator down here shows a bearish signal primarily, and I'll explain what they are. We've also got some support resistance lines and that, and also a divergence playing out on the daily and also the hourly. Let's first of all go to the weekly. So again, if you're new to the channel, we look at the triple moving average 3, 5 and 60 and combine that with the moving average 5 and 50 of the CCI 150. If they align, we show a bearish signal or a bullish signal. At the moment, it's showing a bearish signal, and on occasion it shows a neutral signal, which means they don't align. So that's the weekly trend, and that's all we use the weekly for, as a trend indicator. On the daily, we look at that same indicator, and you can see there it's a bearish signal primarily. We've also got these support resistance lines at 588 for a support and resistance at 902, and also this Fibonacci range in that area. And you'll notice here we've had this minor resistance at 675. It bounced off at once, and now it's broken through to the downside and punched up through it again, so it's sort of hovering around that. But as well, we had this divergence which has played out, and it worked. So what this divergence means, when the CCI is in a downtrend like it is here, and the price goes in the opposite direction in an uptrend, then we call that a divergence. And the way you trade that, or read it, I should say, I don't trade it, I just use it as a potential indicator of a reversal, whether it be a minor reversal or a retrace or a major reversal. In this case, it's a pretty major reversal. You draw a channel between that divergence range and bring it down to the lowest candle in that range. So if the CCI continues in a downtrend like it has, and the price then breaks to the downside below that channel, that's where you would look at potentially, if you're trading it, going short, and the initial target would have been the closest Fibonacci range. That would have been the 23 and the 38%. Now, as it has in this case, sometimes it breaks lower, and it in more of a longer term reversal. So it's broken down into that range. That's on the daily. On the hourly, you can see there, I'll zoom in, the same range, but we've also got a smaller range divergence happening. Now the hourly and the daily are not connected, so they're independent divergence, so we don't read them together. So we only read them in isolation. In this case, the bullish divergence on the CCI was moving up versus a bearish divergence on the price chart. Now you can see there, again, we do the same thing. We draw a channel between that range, and now you could have drawn the initial range here between that high and low, or you could have brought it up to where that finished there. So we could have brought the channel up there. You can see there, broke above there. It doesn't matter, it would have been the same situation there. You would have hit the first Fibonacci retracement level in that area over here. Now it broke above that area, and it just touched that 38% level. So that was a very minor Fibonacci or a divergence play out, but then it collapsed after that. So again, these don't always play out, and if they're pretty tricky, so they're not to be read as long-term direction changes. On the hourly chart as well, if I zoom out, you can see there I've got a long backtest program running, and they're all individual trades entered. And again, I always trade these using the same strategy as the weekly and daily trend pattern, using the fractal breakout. And if I zoom into the fractal breakout, just so you can see it clearly, if the weekly and daily are aligned long, we take a long position on the fractal breakout there, or if the weekly and daily are aligned short, then we take a short positioning when it breaks out the fractal there. So the way you read that is, again, when the weekly and daily are aligned, so you can see there during that period there were only short positions. That would have been during short positioning only during that period as well. Likewise, long positions only during that period, long positions when they align only. So again, that's where we use the weekly and daily. Sometimes, such as in this case, there are a couple of instances where there might be some long positions, but the weekly is showing short, so we don't take any long trades, is the advice there. So anyway, that's one idea of a trading strategy. To understand this and other trading strategies in more detail, reference our Patreon page where we look at that and other strategies, but we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.